Hi there, traders. This is Brad Gilbert with the FX Market Insight for the 19th of December. All right, now we're getting right into the really the business end of the week, where we've got some huge high impacting or extremely high impacting sort of data coming out. We'll just have a look where their major currencies are. Euro, okay, managed to squeeze out the traders yesterday who got short on that bounce around 113.50, topping out at 114 at the trend line. No major surprise that it's stalled there. But sterling continues. There's a little bit of a false break above 126.80. It's unclear. British PM Theresa May's come out and said basically we are going to start preparing for a no Brexit deal. And that is, funnily enough, it's not doing anything. To me, it's starting to look like everyone's factored in a no Brexit deal and they're all short. So we could see this thing squeeze to the top side, but that's all speculative at this point. The Aussie sort of just drifting along sideways here. It's seriously lacking any sort of momentum. And we did have in New Zealand an improvement of the business confidence numbers. Gave a Kiwi a little bit of a shot in the arm to the top side. But once again, that has stalled there as well. Now, if I just come down and have a look at the dollar pairs before I get into the sort of what's been driving these markets around the place. If we have a look at the dollar index, it is, pretty much... it's drifted lower. There was a short-term trend line up around sort of 97 the figure, but it's sort of just bounced off that now. If you read any of the news wires out there, they're talking about the market very nervous, cashing in their dollars because the Fed could be, unwinding, or the pace of their US interest rate hikes next year may be slower than otherwise thought. I think they've already put that in the market, so I don't know why they're selling dollars on that. I think it's just a situation where everyone's waiting for that Fed to tell us, are we going to raise rates more or not? And we'll see what happens from there. Dollar yen, equity markets, they were up 1% in the US. Now they're sort of pretty close to flat. Still, the market is nervous. With dollar yen lower, it tells you that the safe haven trade is still on. And that is, it's easing, but there is still concern there. Dollar Swiss, following the dollar index, hit that low around 99 the figure. And it's now sort of just back in that range. But overall, just trading sideways. And the big mover, we're sort of looking at yesterday, it's the only currency pair I can see that has any sort of inkling of direction, and it was to the top side. We had the manufacturing sales out of Canada, which came out minus 0.1, I think it was. And they were expecting plus 0.4. So sell CAD, buy dollars, wear diamonds. So dollar CAD has shot to the top side, and it just goes with the overall technical picture that we've been seeing for some time. Now, if I just come over here, just have a look at one of the raw nerves in the market. This is where everything's building up around the Fed. Now, the equity markets, the US equity markets, as I said, they're slightly in the green in this case, but they're in the positive zone. Global equities have just been taking a hammering. The Asian equities there yesterday getting belted. So it really comes down to the Fed. Right? When you're looking at the whole situation, that's going to be the focus for the whole market for the next, 24 hours. And that's actually where that dollar index is just cruising to the top side. So no major change in the value of the dollar at this point, regardless of what the news wires are telling us. Dollar yuan continues to trade sideways. Once the Fed's out of the way, I would suspect Donald Trump will be looking to turn people's attention on to something else, and that's where the Chinese will come into play. But the news, now you got the dollar drops. You're just looking at the sort of major news. I mean, they are sort of struggling with a few different things. They will be running with the whole fear concept. That's the one thing that keeps the news services going. But other than that, you're really looking for the next opportunity, and it's all about the Fed. So you come back to, if I just get up the MyFX Trading Hub, I'll tell you where the focus is, or where you should be looking at as we go through the next 24 hours. Let me just clear that screen. All right, so you're looking at the fundamental drivers, right? So once we come into, we're now sort of getting close to the start of the Asian session. Obviously the emphasis will be on the Aussie, Kiwi, and yen. But funnily enough, there's no major drivers coming out in the Asian session. There is a New Zealand current account data that may come into play. We also have the BOJ, and that will be there as well. Actually, let me just give you a look at the the calendar, because that's going to give you a bit more of an idea exactly what I'm talking about. So with the key events that I'm sort of looking at as well, I've dropped off the very low impacting data, so we don't see the Kiwi numbers there at all, because it's a pretty low ball number. Now the BOJ decision, this is a massively high impacting event, but generally they don't do anything. So it doesn't say that they don't, but just be aware the BOJ are scheduled. There's no set time. It's always a tentative time to make some decision on their interest rates, but I can't see them doing that ahead of the Fed. Now, when you come into looking at the really high impacting, and I'm talking about extremely high impacting, you've got the Canadian and the UK CPI data with the Fed fund rate, the massive event out of all of it. This is the key event for all global markets. Now, the question is, the UK CPI, is that going to impact? You know what? I don't think so. Even with the way the market is currently set, it doesn't make sense. I mean, the market's still trying to work out what they're doing with Brexit. So I don't know if that CPI data will actually impact at all, regardless of how variant it is. It's worth keeping an eye on, but don't expect a hell of a lot. Markets, the sterling isn't making a lot of sense, hasn't done for some time. So just be aware of that. But out of all these things, the Bank of Canada, and I'll show you the MyFX Trading Hub in a second. If we get weak CPI numbers here, and I'm talking about really sort of weak numbers, then what we're going to be looking for is dollar CAD to pop even further to the top side. And this runs with, I've been saying it for probably the last 3 or 4 days. The focus, as far as I can tell technically, dollar CAD is the only pair with a clear sort of bias. Now, I had it as mildly bullish. It is now broken clearly through the hourlies, dailies, and weeklies, moving it into more like a strong bullish move. So the dollar CAD, the CPI numbers here could potentially be a good trading opportunity, definitely to the top side. It runs with that momentum. But just be aware, if you are thinking about having a crack at that, just understand that these numbers, if there's big variance and these extremely high impacting numbers, you are going to experience some sort of gapping. So that's the risk around these events. And we don't have a huge amount of technical levels at the top. So that makes it a little bit trickier as we go forward. So where's the major focus coming into the next 24 hours? Well, Asia, as you can see, there's nothing really in the Asian session. You're really waiting for the European session. And as I mentioned before, UK CPI, it's a little bit iffy whether that impacts or not with Brexit the way it is at the moment. CAD CPI will definitely be an extremely lively event, but it'll be pretty short-lived as well. Well, you got about 4 hours, about 5 hours, I should say, 5.5 hours, and then the Fed is going to take over. Now, if you look at the major currency pair outlook, sure, dollar CAD's got an upward bias. All these other pairs are waiting for the Fed to give them direction. Right? At the moment, they are all lacking momentum. They are lacking the fundamental drive to give them movement up or down consistently. And that's why this federal funds rate is very important. And don't forget the press conference afterwards as well. It's going to be where we might even get some more answers around what they're going to be doing in the future. Now, this is, it's a line ball whether they actually raise rates or not. Many are now thinking that they may just go on hold, but it's all going to be around the statement and also that press conference. So very tricky to trade, but don't worry about that so much, because this meeting could give us the direction for the major currency pairs or the US dollar for the next coming months, right? That's why it's really important. It's not about just instantly do we buy or sell. It's about are we buying or selling the dollars for January, February, and onwards, right? This is going to be super important. Trading conditions, not too bad. Brexit impact easing. Trading conditions are pretty good. We've got trend lines around the place. So just keep an eye on this. It's going to be very interesting how it sort of unfolds. Expect a lot of volatility. Sometimes the first move is not the correct one. We'll know what's going on about 2 hours after the Fed announcement. It'll be much clearer. The market will have time to read through their statement and reassess the press conference. And that's where I said, like I keep saying, the best trades are probably after these events. But this is super huge. It is the end of their current plan. So we are waiting to hear what they got planned for 2019. We have seen already that Trump has been almost abusing the Fed and Jerome Powell for raising rates. I mean, we know he's a goose, but these guys are in control of the market. And these are the ones we need to listen to. All right, guys, it's going to be a pretty big 24 hours. As I said, the Asian session, pretty quiet in the lead up to this. We may see something in the European session, but the North American session is where all the action is going to be at tomorrow. All right, or later today, I should say. All right, guys, that's it for me. I'll see you in the live trade zone. All the very best. Cheerio.